Dear friends, today I'll be talking to you on a topic, the difference between management accounting and financial accounting. I am Professor Mugledhar Prasad, a professor in banking and finance area. I request you to please subscribe my channel and like my and share my videos. First, let us understand what do you mean by management accounting, then financial accounting, so that it will become much easier for us to compare. So, what is the management accounting? Management accounting is also known as managerial accounting, is useful for managers and directors to make decisions regarding day-to-day operations of a business. It means the first statement is very categorically saying that this is useful for managers. It means the top management internally for taking decisions, managerial decisions, business decisions, operations decisions, they'll be using this managerial accounting. This is useful for internal communication and the community. Managerial accounting is not based on past performance but on current and future trends. So it means managerial accounting will be used to predict the future, to estimate the future. Means the future sales forecasting or the profit forecasting. So the working capital requirement forecasting. For all these purposes, the management accounting will be used. Whereas the financial accounting, it is useful to present the financial health of a company to stakeholders. The financial accounting statements are prepared by the accountants, the finance managers, etc. And this is useful for every stakeholder, not necessarily for the internal communication and managers, but it is useful for every stakeholder. For example, a banker, for giving a loan, he uses financial accounting statements like profit and loss account, the balance sheet, the cash flow statement, etc. He will use it. Similarly, the investors, for example, investors, to understand the future prospects of this particular business, they will use the financial statements. So this is useful for every stakeholder in the company. And this allows the board of directors, stakeholders, potential investors, and financial institutions to understand the company's performance during a specific period of time. So it is all about the past. It will help us to understand the what happened in the past, how is the performance. These reports are filed on annual basis. So once in a year, as per the statutory requirements, these statements are prepared by the accountants. So that's how the financial accounting. So whereas financial accounting is useful for everyone, whereas managerial accounting is useful for internal communication and decision making purpose. Now, management accounting must rely on predicting markets and future trends. Yeah, as I said, this is useful for predicting the future. This is not about the past. Whereas the financial accounting is a past requirement, it's a past data. So management accounting is based on estimations, calculations, projections, and sometimes guesswork based on certain assumptions for making a managerial decision. So for making managerial decisions, they will guess. For example, let me give an example. Suppose the future working capital requirement. Future working capital requirement is projected based on the future sales. So the future sales, how they guess based on the economic conditions, based on the market demand and supply. So they will study macroeconomic factors. Then basing on that macroeconomic factors, they will guess what will be the possible sales and what will be the possible production accordingly the working capital requirement. Whereas the financial accounting, if a business is a listed company in the stock exchange, the reports must be made for the part of the public records. So this will be available in public domain if it's a listed company. If it's a private company, it will be available only for limited number of people. Financial accounting is exact and must adhere to generally accepting accounting principles or in India IAS Indian accounting standards. So for preparation of financial statement, there are certain set rules. So within that rules only these documents should be prepared. Whereas the managerial accounting, it is not required basing on our needs. The managerial accounts are the management ratios, required other documents will be prepared basing on the need of the company at that particular point of time. So any number of times the ratios can be prepared, balance sheet comparisons can be prepared, a past comparison basing on past comparison, future projections can be prepared. All this is done by the managers any number of times as per their requirement. So this is the primary difference between the managerial accounting and financial accounting. Thank you very much. So I request you to please subscribe my channel and also like my videos, share my videos. Thank you very much. I'll be meeting you in my next video. All the best.